What's going on? Welcome back to my channel. We're back again with another video. Today we're going to talk about understanding how the market moves. You know that song? I like the way you move. I like the way you move. Da-da-da. That's my song. All right, let's focus, y'all. Very important to understand. Before we get into breaking down how we analyze the markets from top to bottom, before we get into different strategies that are used, things like that, I think it's really important that we even understand how the market moves, right? The first time we're looking at a chart, you don't know what you're looking at. You just see lines going up, lines going down. But let's really understand what's actually going on in this market. Please ignore that little notification there on my microphone, but it's all good. All right, we're family. All right, so we're going to get started and we're going to write some notes so that you guys can best understand how to break down these charts, okay? So let me get my notes over here. And the market, all right, so the market is going to move in three main ways, okay? Three main ways, and there's also a fourth. There's four in all. There's going to be three main ways you're going to see the market moving. There's also a fourth way that the market tends to move. The first way that we see the market moves is impulsively. So the market can give us an impulsive move. And we're going to break these things down by example on the charts so that we can understand, right? Second way that the market moves is going to be correctively. Okay, can give you a correction. The third way the market moves is by continuation. Okay, very similar to impulse, okay, impulsively. And then the fourth way that we said the market can move is side to side, or in other words, by consolidation. Okay, so we have impulsive moves, corrections, continuations, and consolidation. Okay, so now let's start with the bottom left here on the charts and let's define what each of these mean. Okay, let's start with our impulsive moves. So starting from down here, we can see an area of support over here, right? And in this area of support, what buyers decided to do as they took over, they bought price up, and this resulted in an impulsive move to the upside. Okay, so this sudden movement upwards is called an impulsive move. Okay, now we got to a point where we encountered some resistance over here, and then we can see that sellers took over for a slight moment, and then we have a corrective move over here. Okay, so in general, when we understand the markets are never one directional, right? You're never gonna just keep going up, right? Or you're never just gonna keep going down. Within the markets, there's going to be different types of corrections. There's going to be consolidations, right? So it's never just a straight and narrow path for the markets to move in. Okay, so after we get, again, our impulsive move, we are going to get a corrective move. And what a corrective move is, if we have an impulsive move going to the upside, the corrective move is always going to go opposite of that impulsive move. Okay, so the corrective move in this case is going to be going towards the seller side. Okay, buyers took over, then we have a short moment where sellers take over, okay, in this correction. And then after the correction has finished, as we can see it finished down here, then we have a continuation of the move to the upside. Okay, we have impulse, okay, impulsive move again to start, corrective move, and then a continuation to the upside. Okay, now very important, how do we know that this is a corrective move? Okay, and what I'm getting at is that if sellers took price from here to beyond this point over here, if sellers took price all the way down here, this would no longer be a corrective move. And why is that? The reason why this would no longer be a corrective move is because it would have broken this previous low over here. And I apologize, that's not a straight line, but it would have broken this previous low over here. Okay, that's what would have happened. It would have broken this previous low over here. So if this previous low is broken, we are no longer necessarily considering that this was a corrective move, but in fact, we're considering that it was a reversal. And if I see a reversal as we're going through this chart breakdown, then I'll point it out. Okay, but it's a corrective move because why? It formed a lower high, a lower high. Let me focus on that concept so that you guys can best understand. If we're starting from here, this is the point of reference, right? So this is the low. Over here, the point of reference, this is what we consider the low, right? And then as we get up here, this is now considered the high, okay? So over here we have the low, over here we have the high. Now, we call this spot over here the higher low, and the reason why we call it the higher low is because we are comparing it to that original point of reference, that original low. So this low, and it is a low because we had a corrective move down, right? This low is higher than this low, making this a higher low. Okay, so one of the qualifications for a correction is that you have to have, now again, if we're talking about the market moving up towards the buy side, you have to have a higher low. Now, if this was the other way around and market is on the seller side, right, then we're looking for lower highs. Okay, and let me just skip along just so that while we're on this concept, so I can give you that example. All right, so over here, the overall movement of the market is downwards, right? So, but in the same way, we get an impulsive move to the downside, right? Impulsive move to the downside. Then we have a corrective move going back to the opposite side, going to the upside, right? Buyers took control for a small period of time. And then we get a continuation back down to the seller side, right? To the downside. Now, again, the reason why this qualifies, this entire move qualifies to be a correction is because in reality, it never surpassed this high over here, right? It never broke this high. If it broke this high, it would have been considered a reversal. But because this became a lower high, so in this case, if we're talking about the sell side, we're looking for corrections to become lower highs. Okay. If this becomes a lower high, then it is validated to be a correction. Okay. So again, we have an impulsive move down, correction, a continuation. And what do we have here? As we continue, then we have another correction, right? Because the direction that it's going is back to the upside. We have another correction. And instead of a continuation to the downside, right? Instead of a continuation to the downside, we did not get that. We got a move to the upside. Okay, so we know that this trend was broken. And not only was the trend broken, right? But in actuality, what we're saying is that this lower high did not stand. This lower high over here did not stand. It was broken. Okay. And because this lower high was broken, because the market did not make another lower high, right? It did not correct to a lower point than the previous high. We consider this move a complete reversal of the trend, right? So this move is considered a complete reversal. Okay. I hope that makes sense. So we're gonna move along. We're gonna move along to other areas of the chart, and then we're gonna go just a little quicker and really see if we can really just get a flow of things so that we can understand again how the market is moving. Okay, let me look for a cleaner section for you guys, and then we could talk about how we see these moves each and every day. And not only do we see them each and every day, we see them in every chart. And again, we see them in every time frame. You're always going to have impulsive moves, always going to have corrective moves, always going to have continuations. And you also have consolidations as well. You find that in every time frame. Okay, so let's start in this area over here. Okay. All right. So the market started down here with an impulsive move to the upside. Okay. Impulsive move to the upside. Right. Then the market gave us a slight correction going the opposite way to the downside. Sometimes the correction is also referred to as a flag, right? Because it resembles a flagpole. If you look at this, there's the pole, and this will be the flag, right? And then we see the continuation back to the upside. Now, why is the correction so important? The correction is so important because this is the area where traders are going to capitalize on to execute on their trades. This area over here. When the correction is finished, traders are looking at this area to enter their trades to capitalize on the buy. Not on the impulsive move necessarily, right? Although some traders do, but that's more risky, right? It's hard to anticipate when the market is just going to reverse to an impulsive buy or reverse to an impulsive sell. But what you should allow the market to do, let it make its impulsive move, let it give you a correction. And after the correction, the safest place to buy and the best place to buy is going to be at the end of the correction. Okay. At the end of the correction, then we're going to place our buy. And in this particular case, if you've been doing your studying, right, and if you understand the foundational concepts of Forex, right, we would understand what this means is that the market went up about 400 pips. Okay, so gold pips are calculated a little differently, right? So that 49D is points, but about 400 pips. And that 400 pips, so for example, if you are risking one lot, right? So in other words, you are risking $10 a pip. That one move, that simple move right there is going to give you $4,000. Okay, that simple move right there gives you $4,000. Took about, you could say from where it was, took about 3 hours for it to form. So $4,000 in 3 hours, very, very simply. And then you could come back the next day and it's the same thing. Okay, so we have, again, we had an impulse, correction, and then a continuation, and the market is going to continue to move in that way. Correction, continuation. Okay, so where are we going to place our buy since we are on the buyer side, right? We are trending up, so we're looking for buys, right? We're looking to place our buy right in this spot over here. We're looking to place our buy right in this spot over here, right? And then again, we capitalize on this move. Very simple. This is a very clean move. And again, we get another 400 pips. Now, I'll just caution you, you're not going to get 400 pips every single day in the market. But in this particular market, the market was moving very, very smoothly. And the market was paying out, although there were a lot of areas of consolidation. Okay, so if you actually take a deeper dive and look at this entire area, two things can be true. This area is in fact a correction on this 1 hour time frame, but it also is consolidation because the market isn't really moving much, right, in this area. We'll see that even more if we go to a lower time frame, right? So if we go to like the 15-minute, all right, so right here we're at that area of interest. And if you're looking at things on a lower time frame, so when we're on the 15-minute chart, it means that, again, every single candlestick that you see here took 15 minutes to form. This is a whole consolidation here. There's not a lot of, maybe a scalper can find, little moves here or there if you're just going for about 10 pips, maybe. Let's see if you're going for about 10 pips here. Yeah, you'll find that. But the thing is, if you're a swing trader or intraday trader, there's not a lot to get from what's going on here, right? You're really waiting for market to get to this point over here, right, when it breaks out of this consolidation to capitalize on this big move. Okay, so we're on a lower time frame, and this is going to be a hard to conceptualize, because again, you might be learning, or maybe if you're more advanced, you understand what I'm saying. But this entire thing on a lower time frame is a consolidation, right? But at the same time, on a higher time frame, if we go back to the 1 hour, right, and if let's go to the 4 hour, let's go to a time frame that we haven't seen yet. If we go to the 4 hour and we take a look, all right, if we go to the 4 hour and we take a look at what this is just a correction on a higher time frame. So we are at the 4 hour. Every candlestick takes 4 hours to form. This is just a correction, right? This doesn't look like much of a consolidation at all, but on a lower time frame, it will be a consolidation. Okay, so depending on what type of trader you are, you could be seeing the market different, right? But two things can be true at the same time. I wanted to point that out. Okay, but again, same move. Let's go back to the 1 hour. Same move we're going to capitalize on, and we're going to continue on with that breakdown, with that continuation there. All right, back to that 1 hour. Okay, back to that 1 hour. And again, we have that continuation there. So now we're looking for some sort of correction. Market is making smaller moves now. Corrections, continuations, corrections, continuations, corrections, continuations, right? And then we get to a point where we're at the highest point here, right? And this is the last continuation that we get here. Okay? And from this point, we are no longer getting necessarily higher lows. Okay, we're no longer getting higher lows. Okay, so over here, you can pretty much say this is an equal low. Okay, this is an equal low. So as the market corrects, right, because it doesn't break this low again, we have to keep in mind. And I'm going to make another video regarding support and resistance, but we got to keep in mind support and resistance when it comes to this here. Okay, so if we don't break this low, right, this move is still valid for the upside. So we did not break the low. The move is still valid for the upside. So again, we come here. And then we have a correction, continuation, right? And then here, this is the main point over here. Over here, what happened is we broke this area over here, the previous low. We broke the previous low. And what do we say? In order for us to validate a correction, especially on the buy side, or if we're talking about the buyer side, we need to make another higher low, right? In this case, we did not make another higher low. We broke through, and because it broke the trend, right? Because it broke through and it broke the trend, we consider this spot over here a reversal. Okay, so this is a reversal. All right, and then the trend reverses. Okay, the trend reverses. So you're doing the same thing, you're now doing it on the opposite side, right? So over here, we had the impulsive move downwards. That's how you should be looking at it. We had an impulsive move downwards, right? And then we had, let's take this whole move, was an impulsive move downwards. Then we had a corrective move upwards. And again, what we're looking for on the seller side, now that we're on the seller side, we're looking for corrections to form lower highs, right? Lower highs, okay? So it formed a lower high because this high is lower. This high is lower than this high over here. So form the lower high, and then we're going to look to enter our sell position in this spot over here. Get my brush. We're going to enter our sell position in this spot over here. Right after the correction, the safest spot to enter your position. And again, here, if you can ride this all the way down, right? You don't have to, but if you want to, you can capitalize on about 270 pips. You could easily just ride it down up to this big candle over here. And even that is 90 pips, way more than enough, maybe even enough for the week, depending on how you trade. So again, you're going to find these moves all the time in the market, and then they're going to reverse themselves and they'll start over again. But you're going to find these moves. So again, you had a continuation, correction, right? This high is lower than this high, right? It's a correction, continuation. But then what happens? That high is broken. This area over here is broken, and we consider that a reversal, and so on and so forth, right? So not going to keep on going of the same concepts, but it's just to show you that the market is going to continue moving this way, and it's going to show you these areas of support and resistance where you're going to get those impulsive moves that start off the trend, and then you're going to get these areas of consolidation too, right? And sometimes it may depend on what time frame you're looking on, and then you might see that consolidation there. Or if you're a different type of trader, you just know that this is just a correction that's happening, and you're going to wait for your point of interest to enter your trade, whether it be the buy side or the sell side. All right, guys. So I know that's a lot of information. I know it takes a while to understand, but hopefully if you go through this video and go through it a couple times, you'll understand that this is how the market moves. It does take some time to practice. You should be doing what I did on this video. You should be doing it on your own chart and marking up way more than I did, so that you're really understanding what you're putting down on the charts here. That's how I started. That's how I came to understand the charts. And if you start this way and continue this way, I have confidence that you will understand the charts and you'll see it a lot more clearly. All right. So I hope this video was very informative to you guys. There's more on the way. Just let's keep on going. Thanks for watching this video. Please like, share, subscribe, and till next time. Peace.